Thank you. Mr. Neal is recognized.
Thank you, Mr. Chairman. Mr. Barthold, could you provide the committee with a definition of tax expenditure as defined by JCT?
Well, Mr. Neal, the concept tax expenditure is actually defined in the Budget Act of 1974, and that's what we try to apply in our annual tax expenditure analysis. And that's essentially relative to a sort of theoretically normal income tax. Any special exclusion, deduction, or rate would create a tax expenditure.
By that definition, would you suggest that the Cantor small business proposal, if it were to become law, would be a tax expenditure?
As a special deduction, we would add it to our list of tax expenditures. As I think the committee knows, Section 199 we list as a tax expenditure presently.
Thank you. Mr. Chairman, we're missing an opportunity here to deal with the issue of complexity. And I ask this question because it's ironic that on the same day that we're debating the Republican budget, which calls for lowering both the corporate and individual rate to 25% by eliminating tax expenditures, or as our Republican friends use the language, closing loopholes, we're being asked here to add a new tax expenditure to the code. I think our time would be better spent tackling some of the expiring provisions that we must pass this year, including the 2012 AMT patch, rather than adding complexity to the code. And you'll see my amendment shortly on this AMT patch. On the topic of extenders, in addition to creating a new tax expenditures, the Republicans are creating a new tax extender with the Cantor bill. I think it's critical that we extend important provisions that expired last year and tackle the provisions that expire at the end of this year before creating a new tax extender. Important principles of tax policy are certainty and predictability. These principles are necessary to ensure that taxpayers have confidence in and can rely on the policies that have long been part of our code, while at the same time improving compliance with law. So it frustrates me to no end this morning that we in Congress, time and time again, allow important provisions to expire only to extend them retroactively. Many of the tax provisions that expired in 2011 are priorities of mine. For example, the New Markets Tax Credit. New Markets is designed to stimulate investment and economic growth in low-income communities that have traditionally been overlooked by conventional capital markets. We've seen the results in all of our districts, and in western Massachusetts, it's pronounced. Stories like Riverview Market, Northampton, and the Colonial Theater in Pittsfield are but two. Another important provision that expired last year is the 15-year depreciation schedule for leasehold improvements, restaurant improvements, new construction of retail improvements. The extension of this provision is particularly important for small businesses like Dave's Soda and Pet Food City in my district. He is not normally given to our political positions on the Democratic side, but is quite frustrated by the pace, I should say the lack of pace, in updating the expenditure argument. If not for this provision, Dave would have to write off improvements over 39 years, which is quite costly. And I'd be remiss if I didn't highlight the R&D credit. It's a huge priority for many businesses in Massachusetts. In fact, Massachusetts is ranked third in the country in terms of the number of companies in the state reporting R&D activity. This credit has had profound results. The R&D credit is estimated to have increased annual private research spending by $10 billion in the short term and $22 billion in the long term. I call this up today, Mr. Chairman, to point out that many of the issues that we should be tackling in a timely manner are being cast aside as we implement policy that has been determined by the leadership of the Republican Party rather than through the vetting process that this committee is noted through history to have accomplished. So I hope the opportunity will avail itself once again. I was pleased that the Chairman and Pat Tiberi last week asked for a process that will begin reviewing tax expenditures. I would note some irony that we're beginning to review tax extenders. This is an important consideration, and I hope that we will proceed to get this accomplished. Also, this unbiased review by tax experts of every expiring provision would be very helpful as we evaluate the effectiveness of each extender. Mr. Barthold, lastly, how many tax provisions expired in 2011 and how many expire at the end of this year? And can you comment on any of the problems with enacting legislation that goes into effect retroactively?
I'll have to respond to you after the markup with the exact count of the number of expiring provisions. I'll provide that to all the members in response to your question. Of course, there are administrative problems for the Internal Revenue Service and for taxpayers when provisions are enacted retroactively. Sometimes it can involve problems in record keeping or documentation. On the economic side, there's not generally an incentive effect to providing for changing tax treatment on something that's already happened.
Using the example of mom paying pop more that you've established precedent with, would you be willing to suggest there are a lot of provisions that have expired or a few that have expired?
A fair number, a good number of provisions expired at the end of 2011, and I'll give you a count. As you know, annually we've produced for members just a list of what's expiring when, and we did produce that document in January of this year, and I'll go back and I'll send a count around.
Thank you, Mr. Chairman.